All right. Well, welcome to the best panel here at the Seattle Interactive Conference. Just putting that out there now. This is the Women Leading the Way in Venture Capital panel, and I could not be more excited about being on a panel with these three amazing women today. And if you guys have questions throughout the panel, please come up to the mic and just ask questions throughout. We'll just have an open session here. So to my immediate left, I'm excited to introduce Michelle Goldberg from Ignition Partners. Michelle focuses primarily on consumer, digital media, and software companies at Ignition. I'm guessing there are going to be a couple cheers for the companies that she's working on here. SEO Moz, Glimpse, Visible Technologies, ICE.com, and she was previously on the board of Track Simple, among many others. And Michelle's won so many awards, it would probably take me about 10 minutes to go through all the awards that she won. But Michelle, thank you for joining us on the panel today.
You're welcome.
We also have Rebecca Kaden from Maveron, and Rebecca is somewhat new to the VC world. She's focused on tech-enabled consumer services, and Rebecca kind of works on, you can correct me if I'm wrong, kind of works on the West Coast, so she's in the Valley, and then she's up here in Seattle looking at companies and evaluating consumer companies. So Rebecca, thanks for joining us on the panel. And then to her left, we have Julie Sandler from Madrona Venture Group. Julie is a board observer for AdReady, On Mobile Media, This Life, and Rover.com. And Julie has done so many things in this community already. She led Startup Weekend Women's Edition and has been really involved
with Shauna.
Getting more women involved in the startup community. So I just can't say it enough. I'm so excited to be on this panel with you guys and start this discussion off. So,
can I just say, I'm watching Twitter, and I'm L Gold on Twitter. So if you tweet me or SIC 2012, you can either ask a question that way or we can watch it too. I'm sure.
Yeah. Rebecca, what's your Twitter handle?
Arcade. I won't be watching it now, but I'll watch it later.
Arcade. Okay. Michelle's manning the Twitter stream. I love it. Julie,
or just come up and ask a question at the mic.
In person or on Twitter. Okay, so let's just jump right into it. So I've talked to a few people here who are in this panel who really want to know more about how venture capital works, because sometimes it's a little confusing, or you don't know, like, is it their own money? How does it all work? So Michelle, do you want to just jump in and tell us a little bit about, on a daily basis, what do you actually do as a VC?
Okay, what do we do? So I think if I step back for a second in terms of how VC works, one of the most important things to know about venture capitalists is we have investors too. So we've raised money and we've raised funds. For the most part, some funds are self-funded, but usually VCs are partially self-funded from the partners and partially funded from outsiders who we call limited partners, LPs. And our LPs can be individuals, they can be family offices, but for the most part, if you have a big fund, they're institutions, and they're endowments, and they're fund of funds. And each of our LPs has their own mission that they're trying to accomplish. They have an asset allocation normally where they're investing 5 to 10% of their entire portfolio, which can be anywhere from $10 million to $20 billion in our case, or $30 billion depending on the day or the year lately. And they have their own missions, and VC is a small part of their asset allocation to enable them to have enough cash from the pile of money that they're investing to then fund their initiatives. And their initiatives can be nonprofit or for-profit. And when we raise money from them, we make a lot of promises just like anybody who's raising VC would, in terms of, here's the space we're going after, here's our expertise. And so the context of what we do every day is really set by the money that we've raised and the investors that we've raised it from. And basically, as Shauna introduced all of us, we all said, sort of what our areas of expertise and focus are. We don't just say that when we're up here, but we say that when we're raising money. And so we really have to make good on, here's what I'm going to invest in. I invest in consumer and digital media, and here's why I'm good at that, and I can do that for you. So that really shapes the context of my day-to-day. And it's not necessarily that I'm thinking about that hour to hour, but it really shapes the context of my job. And then within that, I'm spending a lot of time, and I'll let these guys talk about it too, in terms of sourcing companies, nurturing companies, and then thinking about the market and building relationships for companies to exit into and create business development. We can talk more about each of those pieces, but I'll let you guys talk about that too.
Yeah. So Rebecca, when you're out looking at companies to invest in, how much do you have to invest? What kind of
Sure.
money are you looking at?
So Maveron invests in two kinds of ways. We do seed investments, which are small bets on very early stage companies, oftentimes just ideas or initial kind of traction points without a lot proven. And we do that to really get to know the entrepreneur early and to start that relationship from the ground up, so that it can lead into the second kind of investing, which is Series A investing, where we have seen some of the traction points play out and we've gotten to know the team over a longer period of time. The way we do it is incredibly people-oriented. We look at a market, we look at a product, but really it's about getting to know the team behind it and making sure that it's a good fit on both sides to be kind of a long-term relationship. So we spend a lot of time just really getting to know the people behind the ideas.
And then Julie, what's your approach at Madrona, for those that don't know?
Yeah, so I guess I'd break down my role into sort of three core components. One, sort of the pre-investment, a lot of what Rebecca was just talking about. The second component's obviously hugely important, which is supporting startups, supporting companies once we have invested. So for us, we typically say that can be a relationship that will last 5 to 7 years on average, and we do our utmost to support those companies however we can. Typically, we take a seat on the board. Typically, I'm a board observer. I've been at Madrona for just under a year and a half. And those roles can mean a lot of strategic and operational support. We've all worked with a broad array of companies, and so we take classic pitfalls we've seen and coach our companies to help them avoid those, as well as what's made other companies in similar spaces successful. And we also try to add value in other ways as well, whether that's making introductions to potential channel partners or advising on the expansion into new product lines or introducing companies to potential partner customers, hiring, recruiting, et cetera. I think generally I think part of the value that you receive when you receive venture investment is more than a check. You should always hope that you receive a lot more than that. And a lot of the way that we spend our time certainly falls into that bucket as well.
So I know a few people in the room actually really want to talk to you guys, and I'm curious to hear what you think. For someone who has an idea and they want to talk to you about it, whether it's just an idea or they actually have a business plan or they have already built something out. How do you evaluate the companies that you look at a high level?
So I think, in terms of people having an idea and how early you start, I think it's really important to get in front of VCs as early as possible and develop relationships. And this is really actually helps us evaluate you and your idea. Jeff Entris, who's a great early stage investor in Seattle, always says, he's looking for the data points and to connect the dots. And the more dots that we have to connect, the better we are when you are able to when you're ready to raise money, to move quickly and to know who you are. But I think the most important thing, there's never a too early to meet. But the most important thing when you meet with a VC is when you say you're going to do something, the next time you meet with them, you better have done it. So whether it's a business deal that you're trying to get, or users, or features, or launch, because we are just connecting. We only know what you've told us, really. I mean, there's outside work we can do, but we are connecting the dots. So if you meet with me and say, I'm launching in 6 months, and then meet with me 6 months from then and say, oh yeah, we're not launching for another 8 months, then I'm just gonna, I'm just sitting around and waiting. But if you meet with me in 6 months and come back and say, look, I launched. I said I was, I did what I said I was going to do. And then it enables me to start to knit together who you are as an entrepreneur. What are you trying to build? Or you can say, look, we think we're going to have 100,000 users over the next, 3 months, or we think our growth rate is going to be at 10%, monthly uniques or weekly uniques, or week over week. Just do what you say you're going to do, and if you didn't do what you said you were going to do, address it, right? Because nothing works perfectly, but at least don't gloss over it. You know what you told me. I'm going to remember what you told me. We all are numbers people. We're data people. Our job is to pattern match and connect the dots. And so I think that's one of the most important things when meeting with a VC.
Rebecca or Julie, what do you think when people approach you with an idea, or what advice do you have for folks?
Sure. I think at any stage, we're going to look at three things, which are people, product, and market. And the things aren't equally weighted, and the weight upon them varies at the time that we're seeing them. So super early, your product's not going to be that far along. So what we're going to look at is, are you tackling a huge market that can be disrupted? And then, are you someone that is thinking really big? Can you put together a rock star team around the table to confront that? And then can you get the product there behind it? When we're going to talk to you later, we're going to see, as Michelle was talking about, have you gotten the product along as you said you were going to? Are you still thinking about the market in the same way? Is it as big as you thought and we thought? Has that team come across? So those three kind of benchmarks, I think, are good to keep in mind at all stages.
Totally agree with Michelle and Rebecca. I think one thing I would add is just when you're thinking about how is this VC that I'm speaking with looking at my company, just as some color there. Typically what we're doing is we're trying to get to understand the opportunity as well as the risks. So at Madrona, for instance, as we go through the diligence process and get to know a company really well, get to know the management team very well, we're thinking and crafting in our heads, what is our investment thesis here? What do we find most exciting about this company? What is this company really going to be best in the world at? We have a partner, Greg Gottesman, who always asks that question. What are you best in the world at? And ideally, an entrepreneur will be able to answer that question. But also, what are the risks? What are going to be the big obstacles, the big hurdles that this company faces? And can we, as investors in a partnership with the entrepreneur, get comfortable enough with these risks to make that bet? And ultimately, that's the thought exercise that we go through every time we make an investment.
So I'm curious to know from you guys, for the companies that you have invested in, how much have you invested in the team versus the idea? Is there a way to break that? I mean, we often hear like you invest in the team, but obviously the idea has to be good. What is it in the end of the day that you're actually investing in, if it's an early stage idea?
This is a big debate in VC. There are people who fund the jockey, not the horse, or fund the horse, not the jockey. There are people who are totally market-driven and feel like, look, this is a product in a market that we need. We'll reconcile the team later. There's other people who will bet on a team and figure that the team will find the product for the market. I think ultimately you want to do both. Right? But teams tack a lot. There's a lot of teams that, first of all, teams change. You may not end up with, the founders may not end up being the CEOs and the executives at the end of the day. And markets change. Products change. People attack that market. So I think being a good VC, you can't ride either. You've got to really figure out what you think about the market, and you've got to make sure that you think at least the starting team can attack this market from the beginning. And if you need to fill in around them, then you do so, or things change and the team changes. But it is a big question. It's ultimately best to have a great team going after a huge market.
So from the latest stats that I saw, I want to touch on women in the venture capital world too. And I know some people in here are really looking forward to hearing more about that. Oh yeah, if you have a question, come on up to the mic.
I was just wondering.
But we're actually videotaping it, so if you can, yeah. Thank you.
Hi, I was just wondering, for a company that's already entered seed and raised seed funding, how would you recommend them approach a VC when they're already beyond that initial stage? Because you guys talk a lot about getting to know a company from the beginning, But what if a company's already past that beginning stage and now looking to go into Series A?
Yeah, I would say the exact same rule applies. It's never too early, and to a certain degree, I think after you've raised seed funding, it's still never too early to initiate dialogue with any venture firm that you're interested in partnering with. So I'd say as a general rule of thumb, just strike up a conversation early. It's great if you have someone who might know the particular, say a particular VC you'd like to partner with to make an introduction. And I think right from the very beginning, if you talk about your traction to date, it can be very compelling. I think all three of us would consider ourselves early stage investors, and post Series Seed, as some call it, Series A is still very much within that window for us.
So kind of switching gears for just a minute here, the latest stats that I saw said that there were 11% of women as investors across the board. So I'm curious to hear your...
do you know the U.S.?
That was from Dow. I think it was U.S. Yeah, U.S. I believe. I'm curious to hear from you guys, and this was a question that I heard as I was talking to folks a little bit yesterday too. Your candid thoughts. Do you feel like we're missing out on investing on some great ideas that might appeal to women because there are not a lot of women who are actually looking at these ideas on the back end? What are your candid thoughts on that? Any thoughts?
I'll take that one. So I guess in my head, I frame it as less of a risk and more of a potential opportunity there to increase diversity. I think whether you work at a large company, at a startup, or in a venture firm, I think diversity of perspective is hugely important. And I think increasingly more and more companies in tech and more venture firms are grasping that. And I think you do see that number increasing over time. I think that word diversity can take a lot of different forms. It can mean diversity in experience, which certainly is extremely valuable on any team, diversity in perspective, and diversity in demographic profile can be very strongly correlated with those two other forms of diversity. So I think seeing more women, seeing more minorities is something that reflects a trend in venture, just as it does in a lot of the tech companies that we look at. And hopefully with that comes a stronger and richer ability for investment teams to better understand not only the companies they're looking at, but the customers and the range of customers that these companies deal with. You know, I think right now with women as one example, 84% of purchase decisions are driven by women in the US. And certainly women investors have, one could argue, a ability to understand the perspective of a female customer. I think a lot of male investors are perfectly capable of taking that perspective as well. But having that richness on an investment team holistically, I think really helps the investment evaluation process.
Yeah, I would agree with that. And I think the job of a venture capitalist, I think, at heart, is to understand, does the product fit a market? And the closer you can be to the market in cohesion around a table, the better you're going to be able to make that kind of decision. And great teams, like the ones that I've seen at Maveron, have an ability to kind of step outside of their own demographic and understand that. That being said, especially in early stage investing, there's an intuition to it and an ability to kind of get it. That I think the closer you can get to that market just helps. So I think it's impossible for a team of men to invest in great products dedicated to women? No. Do I think it's easier to do it with women around the table? Absolutely.
Yeah. I think that's, really great answers. As I look at some of the things that I invest in consumer and the consumer internet. And I talk a lot about, does this scale? And usually in tech and VC, when we talk about scale, we mean like, do the servers scale? Does the cloud scale? Like when you have, all of a sudden a rush to the site, are you going to crash the site? Sometimes when I talk about scalability, I mean, does this scale from soccer mom to soccer mom across the country? Like, not does, the Ruby developer sitting, 5 feet from you think this is cool, but do real people think this is cool? And so I think a lot about that in terms of markets. And if you look at something like Pinterest, the way Pinterest started and grew, Pinterest started from I actually think it was the Southeast, because that's where one of the founders was from. And if you look at the growth, we haven't seen anything on the consumer internet grow that way and grow out of what we would probably call middle America. And Pinterest was the fastest growing social network ever in the history of the internet. And if you look at how they did that and how they scaled that and how they actually incented people, normal people, to use that product, and the meme of that product is very much a not tech focused, but much more, regular America focused, besides our friend Joanna, who is in tech and drives Pinterest. But so when I think about the consumer internet and how the consumer internet really grows, I think that women and moms and being purchasers are powerful. And so I think a lot about this soccer mom to soccer mom thing. And this fall, I actually became a soccer mom, a little bit against my will, if you know me. I'm not totally the soccer mom type. So does it enable me to think a little bit more like that? Yes. Can men and women do that? Yes. But we also talk a lot about, at our firm, not being a focus group of 10, because the way real products get rolled out, and when you get to millions of users, you're not talking about people who've been in high tech for the last decade and who are early adopters. So we really try to think about those non-early adopters, and I think just any perspective a diversity of perspective helps there.
Hello. I'd like to hear about how you got to be a venture capitalist. I think I generally have the idea that many people who are successful as entrepreneurs end up being venture capitalists because they're already in that scene and they have an interest, but are there different trajectories for getting into this line of work?
It's a great question. I think one thing that I've seen both locally and friends of mine around the country who are doing similar roles to what the three of us do is that there's no same story. There's no same trajectory for how someone ends up in venture. I think you do see a lot of people who start on the entrepreneur side of the table and then transition to venture that way. I've seen lawyers and iBankers. You see people who worked in large companies, small companies. For me, I worked in product management for a number of years. Went to business school. When I was in business school, I ended up working for one of Madrona Venture Group's startups at teachstreet.com, and got really excited by the idea of entrepreneurship and working in a startup. Had joined the Kindle team in sort of a pre-iPad world. It sort of seemed like the idea of a startup in a large organization. And did some product work as well as online marketing work for them for a little over a year before reconnecting with the team at Madrona and joining last, summer of 2011. So for me, my roles were more operational in both the larger and smaller company context, but I know each of us has a very different story.
Yeah, I have a pretty quirky story to becoming a venture capitalist. I had studied English and writing and became a journalist and wrote for a variety of publications, big and small, and wound up in business school and then decided to go into venture. And when people hear that, they say, that's weird, journalism is kind of a strange path to venture. And to me, it makes a lot of sense because it's about understanding stories of different kinds and understanding how to weave those together. And I think that's at the heart of what draws people to venture and kind of what makes it click for them, kind of an appetite for learning about lots of different stories and understanding which ones are going to work on a daily basis. And I'm pretty new at it, so I'm far from, being a pro and hope to get better, but that appetite to kind of honing that skill, I can see operating in a lot of different industries and then leading into this one.
Mike Moritz, who was one of the most successful investors of the first internet boom at Sequoia, was a reporter, right? And so I always tell that story. And so I think it really, to echo Julie, I think VCs come from everywhere, and it's just people who are drawn to new ideas, who can think both at a very high level strategically, but then can really get down. We tend to be very analytical, get down in the nitty-gritty of the business model and the numbers and the cap table and being able to do all of that type of work. So there is no real path.
Hi, ladies. I was just wondering, to your point earlier, Rebecca, I've heard several people say that investors will look at a book and look at the team, and if the team doesn't even kind of appear interesting to them, that they'll pass on the opportunity. So my question is, how do you build that rapport? Like, what qualities make a good team? What are VCs looking for, and how do you establish that kind of credibility?
I would go back to my connecting the dots. So if you feel that you are not, if people are looking at you or your team and you're not really getting the feedback that you want, I think the best thing that you can do is tell a story. Basically, tell people what you're going to do, and then call them up 6 months later and say, look, we told you we were going to do this now, and we did it. That's the most powerful thing, to get across that data. But the other piece is, as Julie was talking about, sort of why are you best in the world? Are you coming across with real passion for this idea? Is the idea interesting? Is it big enough? The other thing is, we haven't talked a lot about for VCs, we all have funds that are hundreds of millions of dollars. And we do seed investing, but for an idea to really have an impact on a fund like that, you have to exit at a really high amount. And so if you have a smaller idea where you could make a lot of money, an under $50 million exit, it doesn't necessarily move the bar for the VC's fund. So you have to make sure that you're in front of the right people for the opportunity that you have. And then if you're really not getting the feedback and you're not creating that relationship, be really data-driven. Or not even data-driven, basically say, like, we're going to do this that may be a little less data-driven but more about the website or whatever, and just come back and say, we've done it. And make impressive strides and make sure people understand that you're doing what you say you're going to do.
I completely agree with Michelle, but also to sort of you alluded a little bit to the human element in terms of establishing a relationship and what things to say about you and your team. And I think for us, and I think for a lot of us here, it's fantastic when an entrepreneur is able to say, here are my strengths and here are my weaknesses. Here's what I'm really good at. Here's what I'm really comfortable with. And here's what I'm missing. And here's what I need to look for, to hire for when I surround myself with people, when I surround myself with a team who's going to help me really execute on this idea. And I think that reflects a lot of candor, which is fantastic to have in any long-term relationship. But beyond that, it shows a real sense of self-awareness and an awareness of your company and of your team. And that's so hugely important, especially at a very early stage when you're creating a new relationship with an investor.
Hi. This is actually Kismet. I actually have a Skype meeting later this afternoon I attended Lady Coders or ladycoders.com. They really emphasize entrepreneurship. They have seminars where they basically teach women to really go for it, essentially. And from that, I have 2 points. One, you might have this question as part of the panel questionnaire today, but one is addressing, one of the things I talked about was how to negotiate the funding not directly impacting your equity. So maybe you can expound upon that. And the other piece is my situation has come up, it's literally been within 2 weeks. I have this awesome concept, and all of a sudden I've got these folks who want to offer seed funding. Now, there are all sorts of variables here. You can start thinking about LLC, et cetera, et cetera. You're talking about really thinking through your team. I'm wondering, and maybe this isn't a question, I'm trying to figure out, there are different stages that people are going to be in. This is like brand new to me. I'm just coming out of web design school. So I've got coding, but I love UX. And so understanding what my limits are, understanding how to build your team when you're brand new, how do you, I guess I'm trying to figure out how you come up for air and really mesh things together as quickly as possible to present a strong foundation, given that it's so green and that you're so green. Does that make sense?
Absolutely. So you've got two really great things going for you. You have coding and UI. And I assume that, and even if you're not a consumer internet company, I think that one of the most important things happening with the internet today is how important design is for both a consumer internet product but also an enterprise product. And the consumer internet has taught us on the enterprise side of things that UI and interaction and having something beautiful and easy to use is so important, whether it's an enterprise product or a consumer product. It's critical if it's a consumer product because you no longer OEM your way into having your product. You don't do a deal with Dell to have it embedded in the browser or on the computer like the old days. Everything is a click away on the computer, and frankly, it is a one thumb and one eyeball away on the phone. And I always say, if it's consumer internet and it's not engaging to me using one thumb out of one eye, you're done. And so you've got, and it's really, really hard to have both the coding and the design element. And we've done tons of conferences and talks on how to get those two things together. Kate Matz addressed this morning in her talk, like if you're trying to get the devs to do something and you're not a dev, how do you do that? So having both of those pieces, I think, is really powerful in anything that you're going to build today. So that's a great start. And then I think you just need to figure out, as Julie was talking about, like be really honest about what your strengths and weaknesses are. What do you need to build for your team around? Even as a CEO or as a founder, there's a ton of things you can do, but you shouldn't be doing. What's the highest and best use of your time, and fill for everything else with your co-founders and with your team. And even if there are things that you can do, make sure that you should be doing them. So that is the second thing. And then I forget.
So maybe for Rebecca or Julie, I think this is a really good question because I do hear it a lot. You find a company that you want to invest in. Now you got to talk about the deals, the terms. And obviously you guys are trying to get the best deal on your side of the table, but put yourself on the other side of the table for a minute. And what sort of secret advice would you give them if you could give them advice on how to sit on the other side of the table against you? What would you do if you're on the other side of the table to get the most that you can and make sure that the partner also feels good about it?
Yeah, I think the most important thing there is that you're working with the right partner. And if you find someone that you're like, I can see the value that you're going to bring to my company really early, you're excited to be working with me, and the wheels are kind of turning and the relationship is really good, you found something really good to hold on to, and the terms become less relevant.
But let's say they're really relevant.
Okay.
And like you want that.
I think you want to. My experience has been at Maveron, which doesn't have ownership requirements. Is pretty entrepreneur friendly, is willing to syndicate or go solo. And we do that because when we find something that we really like, the terms are not going to be the thing that stand in the way of making it happen. And we really listen to the entrepreneur's needs on that. That being said, keeping a lot of equity of something that doesn't move along because you don't have the right partner is far less valuable to you than losing a little more equity and having a huge push from a really valuable partner. So I don't have a concrete answer to that, but I would really weigh those two things when having that kind of internal debate.
That's great advice. And Julie, I'm curious, a little bit different slant on that same question is, what do you see founders maybe doing wrong when they do come to you to negotiate that equity?
I think it's a failure to be upfront, right at the very beginning, about what the priorities are for that negotiation. So if you're going into a discussion with any investor, whether it's venture, angel, friends and family even, and you're extremely sensitive to, say, dilution, or you're extremely sensitive to a loss of board control, whatever it might be, state that up front, because ultimately the negotiation that you have is sort of a nutshell, a microcosm for how the dynamic's going to play out over time when there are sources of tension, which will happen over the course of several years. So I think if you start at the very beginning, try to be very honest about what the real sensitive issues are for you. When the investor, let's say he or she gives you a term sheet first, can write that term sheet with that in mind. It can be very thoughtful about what his or her own priorities might be, and you can kind of start the conversation from there. I think the worst thing you can do is just to kind of keep things close to the vest and wait, toward the closing date to start bringing up these issues. And I think that if you start early and are just very direct and honest about it, the rest can only get better.
I would just add to that, there's only 3 or 4 things we're really negotiating. And make sure that you're negotiating those 3 or 4 things. And there's a lot of resources on the internet to walk you through a term sheet. There's other entrepreneurs who will help you. And get a good lawyer so you're not like spending legal time on random things. Then you're just wasting everyone's time and money. And so figure out the 3 or 4 things, and they're all sort of interrelated, and so there's some like zero sum among them. And pick the things that you care most about, and then, as Julie said, be really upfront about them.
Hi, great insights. I've got a question. I'm sure each of your firms has its own focus and forte or what it does really well. I'm curious what those are and what you think in the next 2 to 3 years are the best segments and markets and products to be in.
I think at Ignition, we come from enterprise software backgrounds and Systems 1.0 from old Microsoft days, and now that we're in Systems 2 and 3.0, I think a lot of the cloud computing and the data is really, big data is really important and interesting to us. We have a lot of background and expertise there, the same in cloud, and how that hits over to the consumer side. It's both on the enterprise side and then consumer side, because consumer is becoming really about big data too. You just have so much data flowing through these things, and now with the cloud and cloud computing, it's affordable for a company to be able to basically crunch that data and get those insights from it, where before there was so much falling on the floor. So I think in terms of cloud and big data, it's both investing in the infrastructure to enable that, and then when you invest in companies that have cloud and big data, how they use those, use the data to help inform the product.
So Maveron is a solely consumer-facing fund. We invest solely in consumer companies and brands, and within that we have 3 core categories. And within each, we have things that we're excited about kind of being those big outcomes or theses that we have. The first is health and wellness, and I would say within health and wellness, we're most excited about how people are interacting with the aging demographic, how families are going to be able to connect with their kind of aging relatives and make sure they're safe, and ideas disrupting that space. The second is education. And in education, we have a core belief that how we're educated over the course of our lives is changing, and rather than being educated in discrete segments, it's becoming more continuous, and there are some really exciting companies working to disrupt that. The third is what we call tech-enabled consumer services, which is the broadest category, and basically anything that used to be done offline, now done online or on mobile. And within that, there's a whole range of things we're excited about, but one I would say is vertically integrated e-commerce, kind of supply chain management stuff around that I think is going to kind of change how purchasing behavior works online.
Madrona is early stage tech focused, and when I say tech, I mean IT as opposed to biotech or clean tech. I guess if you were to break down our focuses, we typically say they would fall into 5 verticals: consumer, mobile, digital media and advertising, commercial software and services, and then networking and infrastructure. And we're also, as I said, Pacific Northwest focused. So about 85% of our investments are companies that are based here in the Northwest, and that's everything between Vancouver down to Portland and all that lies in between. For us, I think a lot of the trends that we're seeing that we are big believers in, I think Michelle and Rebecca both articulated really well. I think the idea of data being used in fantastic ways. We've got a couple of companies right now, actually Decide as one example, taking incredible amounts of data on products, all products really, consumer products, starting with electronics and expanding outward from there, and taking information that's out there and taking that data and transforming it into really incredible insights that consumers can run with when they're taking on purchase decisions. Another company we have is Place, that's taking mobile data, where you go day to day, and what that means from a commercial standpoint, So if you have all this data from people who have an app on their cell phone, and people who go to Burger King tend to also go to Kmart. What does that mean for Kmart if Kmart gets a hold of that data? It's packaging data in really unique ways that create incredible insights, both for consumers as well as for the commercial context.
And for Rebecca and Michelle, I mean, Julie just mentioned a couple companies. Are there any companies that are on your radar that you're really excited about right now? Maybe in your portfolio or not in your portfolio?
It's hard not to be excited about SEO Moz. And just a company that has grown in fabulous ways over the year, really cutting edge, attacking the internet and inbound marketing, and just a really fun team all around. Glimpse is also fun. I'm a big user of the Glimpse app. It saves me on a regular basis in terms of running late and showing people where I am and connecting with people. So those are two that are particularly fun.
Yeah, it's hard to choose. I would say one is General Assembly, which is a education technology company started in New York, originally as a co-working space, and has found an incredible market that allows more and more people who are not necessarily the core of technology users to become very well educated in how to use technology. It's an online and offline model, which is something that we get really excited about, expanding already all over the world. It has an awesome team of 4 young guys just killing it, and so it's been awesome. It's just been great to see them grow.
Do they have plans to come to Seattle?
They do, so that'll be, and you can already take their classes online. And I guess just the second one I would mention is a Seattle-based company called Julep by an awesome woman founder named Jane Park, who's really thinking big things to disrupt the beauty space online, is awesome at product innovation, and watching her think really, really big and move incredibly fast has been kind of one of the highlights of my career so far.
Great. So we talked a little bit about geolocation, about the cloud. In the interactive space, what other trends are you seeing that you're really watching closely? Anything else that comes to mind?
Well, I think mobile in general. I mean, you can't talk about the internet today, and you can't talk about interactive without mobile. And whether it's transaction-based or whether it's e-commerce or just enterprise or consumer, it's just a huge trend. And these devices are with us always. I mean, I'm on my phone and I'm speaking on a panel at the same time. I wouldn't be on my computer. And I was just met one of the co-founders of Gilt last week, and she said that 50% of their orders right now on the weekend are coming through mobile. And it's interesting because mobile will get more granular, but a lot of the mobile is both iPad and iPhone, and I'm sort of waiting for this next trend when we get a little more granular. What's the phone versus the iPad, and how are now with all of the tablets launching, how is the iPad going to be uniquely different from the computer versus the phone? And I think we'll get a little bit more bifurcation in the industry, but that's definitely a trend to watch. So it's first mobile, and then as we pull the pieces of mobile apart, I think that's going to be really interesting too.
Yeah, I think mobile-first solutions is something that we say, what's done on your phone before it's done anywhere else, and watching that happen kind of across sectors. That's already disrupted transportation, connectivity, social media, things like that. I think the kind of limit of that hasn't been pushed. I would say the same is true with marketplaces. We've seen kind of the beginning of how marketplaces function online, but I think where that will go, there's still a long road that is something we're excited to watch.
Anything else, Julie, that you're watching as far as trends and?
Yeah, well, so I think on the consumer side, I think if there are any entrepreneurs here that are looking to build a consumer product, I think there's sort of mobile first, and then there's also building the product with social features integrated. I think one of the hardest things that we've seen companies both in and outside of our portfolio struggle with is trying to build in those viral hooks after the product's been designed, after they already have something out there that customers are using. So if you right now are an entrepreneur who's focused on building a web product, mobile product, whatever your ideal mode is. Make sure that as you're thinking about the go-to-market strategy, that's very much incorporated into the social decisions you make on the app, on the whatever it might be.
All right, so we have about 5 minutes left. So if anybody has any questions, feel free to come up to the mic. I've heard a little bit as well about the pitch. So I want to ask you guys, there's a lot of, I hear a lot of anxiety from people who are thinking about pitching. Even just having coffee with you guys is like, people, can I get a meeting with you? And not you, but just VCs in general. What advice do you have for anyone thinking about pitching you or coming up and actually having an idea that they want to run by you? And you talked a little bit about it, but what should be like the one piece of advice that you might have for them?
I would say clarity and transparency. Be really clear about what it is you're trying to do, where you are now, and where you think you can get to. Be totally transparent about the skills you have and the skills you need to add to the team, because we are starting the process, even at that first coffee, of deciding whether this is a relationship we both want to engage in. And the more we have on the table, the easier that's going to be.
Great. Okay, go ahead.
Hi, I'm Cindy, and I feel like from talking to angels and VCs, I spend a lot of time telling my story, and I don't often get to hear about like the partner or the angel. And what are like the best questions an entrepreneur can ask an angel or VC to get to know them better?
That's a great question. I think you just stumped the...
Well, I guess this might go hand in hand with the last question a little bit. So I think there's the idea of a pitch, for instance. There's so much tension built up around that idea. So if I'm meeting with an investor, do I kind of have to launch into a pitch? Do I bring a deck? Am I thinking through my key points? And really, I would treat any kind of meeting with an investor as a conversation that you would have with any kind of peer or advisor who you were talking to about your business. So I think there doesn't always have to be a pitch. So I think kind of creating a dynamic where it is very interactive is always really helpful. I think a great way to establish a strong relationship is, instead of launching right in, ask for feedback. Talk about what the current pain points are that you're facing, and try to get their insights, or ask them if they've seen anything similar and what their ideas might be. And then I think beyond that, anything you want to do to strike a personal relationship with someone who might very well be a long-term partner of yours is really helpful. Ask them about what they're excited about that they're seeing. Ask them if they are working on anything right now that they're particularly interested in or eager to talk about. It's always a good way to start.
I think you should ask how they can help. How they can help you. Because if you have an investor, you want your investors to help you, and they should want to help you, and you should be, in some ways, like the pitch, you've got to get your points across really quickly, and you've got to make your case, but you also, again, you're building a relationship, and at the end of the day, you should have people investing in your company who are passionate about what you're trying to do and can help you, and the ways that they can help is a great way to kick off that conversation and start to build a relationship.
Yeah, I guess I totally agree with everything that's been said. And the thing that I would add in terms of getting to know them, I might ask why they love what they do. I think this is an industry that's really fueled off of enthusiasm and passion and belief that even when things don't look like they're going to go your way, they might. And I think in the best pitches, at least that I've seen, the enthusiasm really comes across from the entrepreneurs. So make sure it's coming back at you and really engage in why they love being on their side of the table.
Well, thanks.
What a great question to end. Oh, do we have one more question? Come on up. Okay, last question.
This question is about collaboration and partnerships. So, for example, you've kind of talked about some of your different specialties or the kind of products or things you look at. Do you ever get opportunities where you say, well, this isn't quite a good fit for the kinds of things we're doing, and do you like pass it along to, people in your industry? How do you go about doing that?
Absolutely. If it doesn't fit what we're looking for at the time in terms of market or space or stage, we will definitely make introductions and are happy to do that.
Yeah, I totally agree. I think it's a really critical part, actually, of what we do. I think for most of the companies that we'll meet with on a day-to-day, week-to-week, month-to-month basis, it's not going to be a partnership that we end up making. And that's with that, there's a feeling, I think, of responsibility to our startup community locally to make sure that entrepreneurs are connected with the right resources, because I think we all benefit when great ideas, great teams are backed financially and from a support perspective. And it's great to see when that does happen, because it tends to bring new talent to the area, which in the long term creates more companies, more entrepreneurs, and makes us all, I think, a lot happier to be doing what we're doing.
Awesome. Well, thank you. By the way, it's so great to have your talent here in Seattle. And I just want to say that on behalf of so many people who I've talked to here at the conference. They're so excited to meet you guys and have you here. So thank you so much for coming and being on this panel today. Julie, Rebecca, and Michelle. And I think you guys might be sticking around for a few minutes if somebody wants to say hi.
Yeah, and we'll be
Maybe?
here later in the day.
Later in the day. Okay.
And Shauna, thank you so much for
Thank
putting together this
you.
panel.
All right. Thank you, guys.